Welcome to Online EdVantage. I'm Professor Gonzalez. We're going to go over purchasing inventory using the periodic method. You always need to be careful about which method is being used when you record these journal entries because there's different accounts if you're using perpetual versus periodic. So the first transaction is occurring on October 1st, and we are purchasing $1,000 of inventory. It's on credit, and the terms are 210 net 30. And we're using the gross method. With the gross method, that means that we are recording the purchase without the discount. So it's October 1st, and we're using the periodic method. We use an account called purchases. So we're going to debit purchases for the $1,000. Then we are going to credit accounts payable because it was on credit. So we owe $1,000. The next transaction is going to occur on the 2nd. On the 2nd, we're going to pay some freight on this purchase that we're making. So the freight, under the periodic method, we will debit an account called freight in. The freight, which is the shipping charges, will be $50. And we're paying it now, so we're reducing cash by the $50. On October 7th, we are going to return some of the merchandise to our supplier. Something may have been wrong with it and we're sending it back. So on October 7th, we haven't paid for this merchandise yet, so the supplier would have sent us a credit memo. So we're reducing the amount that we owe. We're not actually getting a refund because we haven't paid for it yet. So I'm going to debit accounts payable by the $200. Under the periodic method, we have an account called purchase returns. So I'm going to be crediting the purchase returns account for $200. Both the purchases and the purchase return account are temporary accounts that will get closed out at the end of the period. Now it is October the 10th, and we're going to pay for the purchase. First thing is, we always have to know how much we owe. Well, we owed $1,000, but after the return, we subtract the $200, so we only owe $800. That's what's in accounts payable for this specific vendor right now. So I'm going to reduce accounts payable by $800 with a debit. If you recall, the terms on this was 210 net 30, so we are paying it within the discount period. So we're going to take from the 800, it was a 2% discount, so we're going to multiply the 800 times 2% or 0.02 to get the purchase discount. And under the periodic method, it goes to an account called purchase discount. That is going to be a credit. And 2% of the 800 is $16. And then the amount that we're going to actually pay will be the 800 minus 16, reducing our cash. So we're going to send them a check or electronic transfer for $784. Reducing cash with a credit. Now we're going to calculate net purchases. Okay, so let's calculate net purchases. First, we're going to start with the purchases. The purchases from the journal entries we did was $1,000. We add freight in. The freight in was $50. Then we subtract out the purchase discount and the purchase returns. The purchase discount was $16 on the last entry, and the purchase return was the $200 from the last entry. So it's the 1,000 plus the 50, and then we are subtracting the 16 and the 200, and that gets us to net purchases of $834. Thank you very much. I hope you found this video helpful.